The Ethereum ETF shocks nobody. Texas power grid is backed up by Bitcoin mining power, and we will get to the bottom of the mystery of lost royalty. All this and more on today's Blockchain Basement.
Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're gonna screw me, at least pull my hair.
Hell yeah. What do you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now.
Level. So I don't even know if we're gonna get back below there, but if we do, that's kind of where we
Welcome one, welcome all. Welcome to the Blockchain Basement. We have BJ in probably one of the most exciting outfits of this year. BJ, how are you doing? How are you feeling in such an attire?
Yes.
Yes? All just
I
yes?
feel free.
Look at that.
Are these?
Wow.
Oh, God. We just went straight for it.
Wow. Owen's getting feisty with that thing. You give him a little control, a little bit of power in the PTZ, and it's like a villain born in a comic book
More like
series.
Peen TZ.
Yeah,
But,
Peen TZ.
whatever.
Morel, how you shaking today? How's
Doing
it going?
Doing good.
What are you
Thriving
working on
Thursday.
today? Are you rebranding a bunch of stuff?
Yep, working on merch, dude.
Okay.
Trying to-
Gonna have a new look to the merch shop?
Absolutely.
All right. I did cut the Druth shirt up and use it on stage. Fit a little bit better. It was better for the moment and just heavy metal lifestyle. You know how we do. But
I can
Owen,
dig
how
it.
are you doing today, sir?
Owen.
Let me see you. His
Owen.
face. Look at there he is.
Good.
No, you got to show yourself. I got to see your face.
Oh.
You hide behind this. See, and there's a reason why he hides so much is because this
Because of the
mystery
whole
broke.
Princess Diana.
Uncovering the enigma of forgotten royalty here. Let's learn more about this. Diana's line lives on, and this young stud, long
Oh, it's
lost.
Owen.
Look at this. Is that Owen?
I think it's Owen.
So we're basically at lostprince.org to present a compelling evidence, meticulously researched historical accounts that strongly suggest that Owen is Diana's long lost son, inviting you to explore this intriguing possibility with us. Absolutely an in-depth.
Wait, is this an actual website that
This is-
exists?
Yeah, support us by acquiring a DNA sample. That is the next step in this mystery. I think we're going to get to the bottom of this here in the Blockchain Basement once and for all. This is great. I just absolutely appreciate,
This is amazing.
Who made that?
Can anyone guess who made it? Let's take a wild guess.
You, Hannah, or Hudson?
Hootie Slices.
It was Hudson.
Hootie
Yeah,
Slices,
obviously.
also known as Hootie Slices.
Someone
So,
comes up to me and said,
Yeah.
"Hey, have you seen the website?"
by providing Owen's
Like,
DNA
no.
sample, you become a crucial player in the mission to piece together this intriguing puzzle. As a token of our appreciation for your invaluable assistance, we're offering an enticing prize that could be life-changing. My God. So the mystery continues. We'll see if we can get that DNA
So
sample
enticing.
sometime. Let us know in the chat if you think this is doable. What's up, Mario Cantonese?
Jesus.
Nasty coin operator, blue punk rocker. Welcome one, welcome all. It's a fantastic group. And, there's a little bit going on in the markets today. Yeah, Bitcoin has a little sneeze trying to touch that $26,000 level. Interesting to see. We had a little bit of a pump, a little bit of a movement this morning. But in general, I remain pretty stagnant in my thesis about just the overall market moving back down. Feeling this blue line in the sand. This is my line that I've had for quite some time. But many other people in the actual TA specific side are calling for these similar levels now, which, it's just more kind of validation of my overall thesis of where things are going just in the short term. Makes me excited though. I was trying to get logged in on Coin Market Cap earlier today because I'm building out basically the watch list of everything that I'm watching real closely as far as what to move into when I really feel like we found that nice structural floor for the next move up in Bitcoin and thus other cryptocurrency programs that are out there, or markets, whatever you want to call them. But there's a lot of upswing that'll be had in smaller market caps, I feel like, coming up shortly. Where is my watch list at here right now? And yes, Cardano is on there, BJ. Absolutely. Solana, I'm
I don't
watching.
care about Cardano anymore.
You don't care about Cardano anymore?
Whoa.
What? What happened? What
No.
happened to you? What'd they do to you?
Fine.
Is it the
What?
chart?
Oh, no, I love the chart. That is
DJ,
buy
we
zone.
I just bought a bunch yesterday
I know.
because of you.
So Owen had, I'm just straight doxing Owen right now, had $3,600 to throw at something.
I'm
And
straight.
part of me did the math where I was like, all right, if you buy, we're real life mathing here. So if you had $3,600, that would have got him 14,400 ADA. Let's say that just goes to $4, so that'd be $57,600. But part of me was like, should he just DCA? Like,
Yeah.
I honestly don't think going all of that straight into Cardano would have been the worst idea. But if we're still having some downturn, like I still think we hit 19.7 at some point before the
Yeah.
end of the year. Do we see a teen Cardano? I'm not really positive, but it's like, how much more would he been able to accumulate?
And you're saying this point, hitting these levels is not unreasonable for Bitcoin in the overall
I
market.
think 19.7 is in the cards, but
Yeah.
like
That'd be right
it's-
about here.
I'm not saying that's irrelevant, but it's like unless you own hundreds of Bitcoin, like how much do you care?
Mm.
You think
Like-
it's going to go back down to that?
I think we might. It might be a little bit more than a wick, but yeah, I mean, I still think before the end of the year there will be.
The
Hey,
yearly, it's been holding this 25-cent hard. This
Yeah.
25-cent mark real hard, but that's
But like go to the all time. Yeah, I mean,
Yeah.
even back there, it's like there's kind of a line of support all the way
Mhm.
through there.
you have the front end chop here right about 16 cents. Not much chop for stopping it once it blasted 25 it stopped at for a short amount of time before the real run.
Also, Troy says Cardano works great, but for making money, that's over. Look at the micros. So let's look at Ethereum. We're sitting at what, 2,000? I can't remember what it's at. I don't see Ethereum going above 10.
Yeah.
So let's say it does go to 10. You 5x. Cardano to return to its all-time high alone is a 10x from where we
This
are
is
right
what
now.
people are feeling stronger about Ethereum for, just in the general
Like,
sentiment.
if that is your statement, and I'm not saying you're wrong, my opinion simply is that you're not seeing more than a 5x with Ethereum. You're just not.
Well, yeah, and it's a larger market cap. It's harder to
Yeah.
move and get parabolic rises if you have a larger market cap, and that's a kind of the dichotomy that we deal with when we're like researching and following what's hot on crypto Twitter, what people are talking about. The word's already out there, and a lot of times that's already kind of a discovered project. So you can expect, we were talking about this yesterday with Polygon. It's like, I don't expect Polygon to be 100xer for me. So I'm going to have slight exposure to, because I expect like a 5 to 10x out of it.
Yep.
Nothing massive, nothing crazy. But just more kind of mainstay institutionalized type projects have a better likelihood of being around and available and active when the bull market returns in a big way. If you look over the course of many cycles at what the top 10 are on, different exchanges, that changes heavily. The real mainstay in there has been, XRP, Ethereum kind of really had its up and come 2017. XRP, Doge, and Bitcoin have been around, and then Litecoin, surprisingly. And then we see Litecoin being brought up on I don't know if it's still available on Robinhood, but when it was, I know that helped out. Just a lot of kind of retail people feel like they have options, and any kind of consumer of goods is going to want options. And you're going to see people that just choose a coin because it's 20 cents instead of $20,000,
Yeah.
right? Even though they don't understand it's fractionalized.
So Fade and Tradfi says if the ETF gets approved, ETH will smoke that 5x. Legitimate question. The market cap would have to be insane for that. We're talking towards trillions. Also, I am asking for the answer here. With an ETF, they're not necessarily trading the actual asset, correct?
I believe it's still the synthesized version of it.
So I'm not sure
Unless
how
they're
much.
backing it with spot in a custody account, which has also been
So
discussed.
that's the question. How much will you really? Because what Ethereum hit, what was it, $4,000 roughly at a $300 billion market cap, I believe, somewhere
Yeah,
around
let
there.
me go into that. I'll look at the market cap.
So it's
history
like
here.
if you want to hit 10, 12, you're looking at
So
a
it hit
$500 to $600 billion market cap.
547 billion was
547?
547 billion was the peak market cap at the time. That made a price.
So you essentially have to double that to
4,700.
even get close to $10,000. So
Yeah,
you're looking
so
at
it's
over
a
$1 trillion market cap.
What would it be if it happened? Yeah, a $1 trillion market cap for Ethereum would make it at $8,300 per unit.
So that's a 4x.
That's a 4x, but it's still, you got to keep in context.
No, that's fine. Like I said,
know?
and I was talking, and it's like, look, I don't despise Ethereum. I just don't trust the network. And I am in somewhat of a dilemma is, am I about to miss a lot of potential gains? Like, I think you're smart going to Polygon. Am I personally going to do it? Absolutely not. But like, they are probably safe things unless I am correct in the sense that governments and nation states are using Ethereum as the system that they can eventually break. So that's a big question, and that is a giant if.
Yeah.
But it's just fundamentally like I don't like a system that has, first off, the non-deterministic gas fees is a deal breaker for me. It just
hurts.
simply
Hey.
is.
It hurts.
It's like a girl who immediately asks what my star sign is. It's like, it's a red
Yeah,
flag.
it's not helpful to the process.
No, it's not at all. And then the whole layer 2 solution, I don't think is a solution. You're fundamentally building on top of a broken foundation.
I have a
So
question.
we'll see. Like,
I got a question.
we'll know in 15 months how incredibly wrong or right I am. And then that's why it is really about doing all your own research.
And it's a theory. You're floating a theory.
Hypothesis.
Hypothesis.
Hey, BJ.
Yes, ma'am.
What's your star sign?
Hey. I think everybody knows what the hell I am. Anyway.
What are you?
Star sign.
Yeah.
We pivoted to
This
I
star
have
isn't
another
about
question. What is it? Come on.
You're trying to dox me live.
Are you a Gemini?
Of course I am.
Okay. I like Geminis. Geminis are my fave. I'm an
chaos.
Aries. Would you rather put $100 into Cardano or Ethereum right now?
Cardano.
Okay.
Like,
I've just never heard these words come out of you. This is a new BJ today.
What?
He said I'm no longer a fan of Cardano.
Oh, well.
that was a joke.
yeah. I mean,
Okay.
Yeah.
I thought you were being for
BJ is
real.
a Cardano.
Does it
maxi.
smell? It smells like sea fish in here, right?
Then he explained everything, and I still asked
Because I'm facetious.
Okay. Next.
So
And a lot of what he says, you got to take into account. I mean, maybe there are crazy ideas, but I mean, crazy things.
I mean,
have
I was
happened,
right about the whole base thing.
Yeah,
That
there's-
it basically looked like Coinbase was slowly going to become FTX 2.0.
Yep.
You can't stop
and the
Bitcoin.
liquidity grab of the end of the year.
Yeah, there's a
You know?
lot of other chains that you can't stop, and it's Ethereum became extremely centralized.
Yeah.
Like it fundamentally did. I know people are like, oh, there's 900,000 validators. It's like, no, there actually aren't. There's a much smaller supply of those. Plus, you're sharding, you're docking. None of that's there. Names are hilarious, but it's not there at all. So it's like governments potentially launch a CDBC on there. Ethereum breaks because all your layer 2s are backdoors. And then they basically do a CDBC that's off chain because it's like, look, we tried to have the transparency of blockchain, but now we can't actually do that. So it's kind of all set up for all this. Plus, like, what the SEC was just going after Coinbase, and now they're in the green out of nowhere.
Yeah.
So there's a lot of it
Yes.
doesn't line up for me, but also it's like in a world of dissent, you do start looking at things maybe a little bit more than you should. So not saying I'm right on any of this. It's just things that go on in this chaos brain of mine.
It's okay to think about the possibilities, right?
Yeah.
I mean,
Oh, we're going to have fun with the Texas thing.
Hegelian dialect's a real thing. You create the problem, you have the solution, and then all of a sudden you're the savior, right?
Yep.
So we see that done more and more. And, we're talking about theory and the potentials of it. There's a lot of talk just on crypto Twitter and in news today because ARK Invest has now, as well as their Bitcoin spot ETF, they've
I'm pausing
applied
for a second.
for Ethereum.
Fade and TradFi, if you want to look at what chain has the best Nakamoto coefficient, you're probably going to be more surprised. It's Cardano. Massively. Well, anyway, continue.
Oh my God.
Yeah.
Well, on Ethereum, because we're talking about it, and I'm gonna, just so we're clear, I'm gonna own both Ethereum and Cardano. So I think there's a degree of truth to everyone. If they're doing a hard amount of research on the potentials for a project, either good or bad, there's something to it there. So just makes you think a little bit harder, which might be hard for some people. But according to the latest information, ARK Invest has submitted its Ethereum spot ETF application to the SEC. The product, called ARK 21 Shares Ethereum ETF, will attempt to track the performance of ETH, the native currency on the Ethereum network, obviously, by measuring it against the CME, Ether dollar reference rate, New York variant, an index that aggregates the trade flow of major ETH spot exchanges. So basically just a number of companies have recently submitted Ethereum spot ETF applications to the SEC as well, and they are likely to be accepted. But we have to keep in mind this is probably going to be happening in 2024. We've heard them kind of pushing everything back until that time frame in general, even though there's a lot of really great things that are being called out through various, I think it was the Grayscale lawsuit that gave Bitcoin spot ETFs a better chance of being approved in the future. It's not here yet, so you got to realize that patience is going to be a virtue over this holiday season as we see the dust settle on this new floor we're creating in Bitcoin and finding out which projects are staying afloat and staying relevant.
Was that a panty joke?
A panty joke?
You said patient. Oh, I thought you meant medical patients.
No,
I'm sorry.
Maybe I did it subliminally. Owen Allen wanted to ask about Polyswarm. Just in general, I like Polyswarm for its, quick moves, and then I can take profits, and I don't feel bad if those profits are in the 50%, 80% range. Because Polyswarm, it's a fast moving up and down ride right now. It's a small market cap. Very much utility based. It's a malware detection system for Web3. So you're going to have a niche amount of companies that are even involved with that to begin with. Then you have the niche of needing malware detection within Web3, right? So it's a niche on a niche. But again, I've talked about data security as being a big part of the essential pieces of the toolkit that we need to be building this digital infrastructure that we all hope to have together, with an ecosystem of digital payments and digital goods and services being offered, so that we can reduce the amount of middlemen that are involved. But that's going to come to the pain of people that are, currently in those middlemen type positions. Like you have to think about if our power in blockchain is translated directly over to real estate, you're really going to be relying on the person to person interaction to be that saving grace for that industry in general. So, just keeping those things in mind. I'm kind of going on a tangent about that, but I used to be in HR or headhunting, and then, doing the aggregation of different resumes or different information. That used to be a very human job. I've seen it physically move into a digital sphere. I also was in heavy manufacturing for Lexmark, and watched that basically get automated from a 300 person production line down to 8 people pressing buttons, overseeing a computer system. So just keep all this in mind as we see what we're hoping to be built out, because there's a lot of work to do. And different utility tokens like Polyswarm, they have their place in their use case, but I'm definitely not married to it as the future of digital encryption and future finance. Definitely realize those gains when they're there. Better your life in the here and now. Can't live in a Bitcoin, so just keep that in mind.
C90,
take profits.
And then also fading TradFi. The Nakamoto coefficient for Cardano is 38.
And C90, I think it's a good trade, especially if you want to have greater gains than with ETH. BJ pointed out the best point, that to get back to all-time highs, you get better return.
Mm-hmm.
And it really don't see Cardano failing in any sense. It's slow to the party, but once it gets there, I think it's an easy win.
Well, and people forget about how fast the party moves when it actually gets going. You have to think about all these tokens like Cardano or ICP or
Ethereum's
HBAR.
Nakamoto coefficient is 2.
Number 2? Then what was Cardano's like 38? Okay. There's the thing.
Anyway, continue.
There's the thing. We keep in mind that when the party really starts, we see crazy, weird projects like Mana go nuts, right? Mana hit $5 a piece. And, at the time there was a little bit of traction, some people were starting to flow into the ecosystem, but everyone was on that talking point that metaverse was the future. It's here, it's now, because lockdowns were a hot topic, and a lot of people just kind of were imagining or realizing this digital future that they're being told to accept. So that played into Mana's narrative going absolutely nuts. Now we see them trying to rebuild, stay relevant into the next market. Yeah, and I talk about Algorand being so far down, but literally if Algorand's just there and active and available at the party to receive the massive influx of people as they see these gains in comparison to what they're being crushed by in their fiat dollar when inflation continues to tick up over the next few years, when they're sitting there realizing that the fiat currency that they're holding in their hand is melting through their fingers like ice cubes in the sun. And they will see that the very basic, just day-to-day person is going to realize these things more and more over the next few years. That's what gives me a lot of hope that,
the problem with that analogy is that you could reharvest that water and still have the same amount. But that's not the case anymore.
That's not the case.
Yeah.
It just drops to the ground, goes in the gutter. Then astrazine put into the water,
We're making the fish gay.
And all of a sudden the ADL is going after pictures of frogs. It goes from 0 to 100 quickly. But, just in general, I like, on this subject, I think that these altcoins are going to be much better performers. I mean, granted, down for even just a hot second. And I really kind of realized that, risk assets are going to be my best friend as the economy continues to spiral downward. The signal that really kind of clicked in my brain is when I saw WTI, the Western Crude Exchange. It was one of the main oil exchange on Wall Street went to negative $17. And obviously, they weren't paying you. You had to pay to actually move the oil, but it was literally they were paying people to have the oil, and that. Just in the macro sense, the oil being the backer of the US dollar and it moving in a negative direction when we see our GDP plunge to levels we hadn't seen since the Civil War, it is go time. Big changes are coming on the horizon for the very ground of which we walk on. And, banks, it's going to be interesting to see where they find their place. And I do expect them to be part of financial future. And I feel like that the need or the want for banks to continue to have their third-party hand in the pot on this transfer of value is why this process is not going to be easy. So kind of going on a rant by that, but the reason why I'm bringing this up is because seeing all these things, I want things that are spicy. And basically, if Ethereum hit its $1 trillion market cap, we'd be at 8,000, right? But if we look at Cardano, just in comparison, and now we go to coin market cap. Let's see what it peaked out as far as market cap.
Was it 310? Oh,
let's see.
It's like 64 billion.
No, it's 90 billion. $90 billion. So Cardano, and let's say it conservatively, let's say it doubles its previous market cap.
Just put it at Ethereum's. Put it at 300.
300. And that's what Ethereum is roughly at, I think. Well, no, that's not what it is right now. That'd be $8.29 a coin.
That's why everybody says
31x.
$10. I'm like, ugh.
And it's easier to get to 290 billion rather than a trillion.
Yeah.
So these are the types of things that we got to keep in mind when we're seeing, yes, ETH has taken over a lot of the big, marketing and development programs with institutions to get them involved with the blockchain to be using it. But you're going to have smaller players that are going to be noticed, and they're going to have their own specific use cases, things that they've kind of tweaked on how they do things, centralized or decentralized, that are going to be preferred by these big companies, and they're going to have their chance to shine in the sun. So, don't be kicking rocks and thinking that, you can go after a certain crypto with just surety. Like, Solana paused 7 times, but then also a ton of VCs just love the thing. And they're probably going to love it to a degree in the next bull market as well. And then not to mention NFTs, right? And NFTs are down in a big way, but they might come back just as chaotically as they came to begin with. And the idea of pictures selling for hundreds of thousands of dollars didn't make sense before it started happening. Still hard to make reason on how it happened even now, but I won't be surprised if it comes back because things are getting weird. And, there's been actually a really fast increase in millionaires in the U.S. I don't think we have that story, but
is that because people making money or inflation?
Well, they're kind of the same there. But yeah, in the dollar rally, we talked about it yesterday. Now it's got a record 8-week green candle kind of pattern on it right now. This is just the
You ready?
No.
Oh, my, and you got to turn the music off.
And make sure the audio is still
Yeah.
in.
Owen, shut me down.
Owen!
Unbelievable. We'll
Sorry.
Pull up, it's all right. It's
And the
all right.
mic's
fell
back.
asleep.
It's all right. Pull up this chart though. This is the dollar. The DXY has been ripping for 8 weeks in a row, which is setting a little record. Now, I don't want to go on a riff. I do expect that this actually calmed down, but just the overall trajectory of this looks like it's going to be trying to get pretty expensive. The dollar is looking pretty strong right now, just in general. So keep that in mind just for the time being when we look at how that relates to Bitcoin's price. And just with all this good news, like we've had, the ETH spot ETF filing, good news usually would do really good for the market. The Grayscale win, which was right here. Visa and Solana, which is a massive partnership to be talking about to the mainstream public, especially during a bear market when it's not the sexiest look to be involved with cryptocurrency, but apparently they know something about the future that regular people don't, right? Fair value accounting changes. That was a really big update we covered yesterday. Michael Saylor came out earlier this morning, kind of quantifying those and agreeing with those sentiments that it is good for traditional finance to be able to get access to crypto through those fair value accounting changes. Yet the price keeps fading. Good news time and time again. This is just the overall graph of Bitcoin and Ethereum. They really are kind of asleep right now. And that was really big news. Like when the SEC lost that small portion of the case to XRP, it doubled the price of XRP, but in general, the graph looked the same, fell back down and is now flattened out. So definitely a kind of a telltale sign of where the markets are at right now. It's from Dagnum PI. I like this guy. He's always covering the DAG updates from the people with Iron Spider, Project Iron Spider. So I like to follow him for those updates. It gives us this insight. Bitcoin's offering a solution for a looming depression, an inflation issue that has been eroding worker pay over the years, and houses aren't becoming more expensive. It's the value of the currency that's actually diminishing. Comparison of real estate to gold ratio reveals that housing today is cheaper in terms of gold than it was in 1930. Very interesting take.
It's taking a bunch of different variables and making that work for yourself.
It is. But I've never heard this take before, and it's something that, kind of got me thinking. Like, this is gold versus home price graph. I'd obviously assume that the gold is the yellow. Let's see here. Basically, you have the 1980s spike, 2011 spike. Looks pretty much in line with each other. And interesting, this was also something I wanted to highlight here. I'll start it over here. You can get the sound going.
Go ahead.
In a silent depression. When you compare the Great Depression to today, this is going to absolutely blow your mind. In 1930, during the Great Depression, the average home in America was $3,900. The average car was $600, and the average monthly rent was $18 or $216 a year, and the average salary was $1,300 for the year. Fast forward to today, it is $436,000 for the average home, $48,000 for the average car, and the average rent is $2,000 a month or $24,000 a year, and we have a $56,000 income for the average American right now. So if you look back to the Great Depression, the house was only 3 times the average salary. Now it is 8 times the average salary. The car was 46% of the salary. The car today is 85% of the salary. And here's the craziest part. The rent was 16% of the average salary. It is now 42% of the average salary.
That hits with me, man.
That's crazy.
And it's stuff like this. How do I exit this? It's stuff like that this is kind of the silent death that and they describe this silent depression. I like that term.
Silent depression.
Yeah, it's been explained like you're a frog in a pot and it's boiling slowly, so you don't realize that it's boiling on you. And I was kind of looking into the stats of what your salary was when we were experiencing a true depression compared to what it is now, and then that major difference in how much more expensive housing and food and vehicles are for us in our current system compared to that of the Great Depression. And one thing is that the Great Depression had like an unemployment rate of 20 to 30%. So don't think we've seen that in general right now, but we do have a lot of non-participation in the workforce, which is not accounted for in the overall unemployment levels. And there probably was I would wager that it was a very much smaller amount of the population that just didn't participate in the economy in general back during the Great Depression. So some things to keep in mind, and just more reasonings why, I don't really sit and think about, I'm just going to put all my money, park it in cash really ever again. It's either going to be Bitcoin, it's going to be homes, it's going to be probably biotech stocks as that opportunity presents itself. More so I'm feeling like biotech's going to be hot in 2028.
Should we start a new company? Because I was talking that it seems like one of the new anti-aging and I guess cellular reversal of aging stuff with like senolytics and everything is that Glynac, so taking NAC and glycine to essentially boost glutathione levels, but that's slowly becoming like the new supplement craze.
Okay.
So I guess we should start a company, yeah?
I mean, I'm down for it. I think biotech and longevity research.
Well, that's not even biotech. I mean, that's...
Well, I think that biotech nanotechnology is going to be something real big too. Tiny robots.
Oh, like what DARPA did in 2020?
No.
I'm kidding.
Like the surgical robots, right? The little teeny.
Yes. Surgical robots, nanotechnology robots that could potentially be going into your bloodstream and fixing your stuff, right? That's kind of, it's creepy, but also
necessary.
Pretty amazing to think about. So this, I wanted to just share just a quick map. I'll probably just share this on the main, I think we're logged into my Twitter, but this is the Bitcoin prehistory. It's a result of 40 years of research, development, and demand. And this goes all the way back to 1974.
But it's just a flash in the pan.
I know. And this is why I'm showing this, is because of how much work has gone into what Bitcoin is today. 1974, first kind of highlighted moment on this list is Surf and Khan, a protocol for pocket network intercommunication, a TCP IP. Then you go into the Timothy May, the Crypto Anarchist Manifesto, 1988. That's my birthday. Then we got over here, I wanted to set here Cybercash, 1994. Basically just a slew of different kind of development research programs that went into the infrastructure of digital payments. And this is the groundwork. This is not a flash in the pan moment. Like BJ said, that's like when we talk about Bitcoin to people outside of the crypto markets that aren't watching it day to day, they feel like it's just a flash in the pan type fad that's just going to go away. This thing is nearly 50 years of development and research behind the infrastructure we see today. It's a lot bigger than just, Furbies or something like that. So keep that in mind. I'll probably share this. I think I'm logged into myself on
Or
this.
the Beanie Baby they made of Owen's mom?
Yes, the Beanie Baby of Owen's mom. Absolutely.
They made a Princess Diana bear.
I was about to say that.
Can we get him one?
Oh my God.
Aren't they still millions of dollars? I'm kidding. They're not. They're worth nothing now.
The Beanie Babies?
Okay. So we're not going to go down that road. RIP. And, Owen.
Wait, do you guys remember what Princess Diana and Dale Earnhardt Jr. had in common?
Don't do it.
I want to hear this.
Don't do it.
Raise hell, praise
Their last
hell.
big hit was The Wall.
Stop. That's not.
Oh, wait, there's that Pink Floyd. I might have messed that joke up.
I knew it was coming. I knew that I was supposed to stop it, but I didn't. So there you go.
That meant to be a Pink Floyd joke. You're supposed to do either Princess Di and Pink Floyd or Dale Earnhardt and Pink Floyd.
Absolutely brutal.
Don't do that joke the way I did it.
Unbelievable. So, as we saw in Texas, it was very hot over the month of August, and this is just a little highlight I wanted to do. And me and VJ were talking about how they might have gamed the numbers a little bit. We're going to look into that, see what we come up with. But this broke. Raw's Alerts is a great account I follow for, because I'm a prepper. I watch natural disasters and national disasters as they unfold, like on the podium for 4th of July and Biden. So Texas Grid declares a level 2 energy emergency. This is for Texas. The Electric Reliability Council of Texas, known as ERCOT, main electrical grid operator in Texas, declared a level 2 energy emergency, and they're urgently warning customers to limit power usage due to tight conditions. Texas officials warn that rolling blackouts may be needed. This marks Texas' first power emergency, said that since the deadly winter of 2021. We've seen this bouncing back and forth for Texas. They are an insular grid, so we're keeping that in mind as we look at this. Then we come across this news as well. Bitcoin miners are so good at balancing the grid during shortages that they get paid millions to do so. And it's been reported Texas paid Bitcoin miner Riot Blockchain $31.7 million to shut down during this heat wave in August. Very interesting thing to think about.
And this is where it gets interesting. So
It
they paid
is.
them that much when Riot, on average, mines 333 Bitcoin a month.
That's what they did even in the downturn. See, so what
So they
did,
paid them 3 times that.
yeah.
And then the other question I had that Drew and I were looking up, it's like, all right, so you're claiming that the Bitcoin miners are potentially over throttling the network. So how much electricity does Bitcoin mining in Texas use? Before we answer it, just guess, chat. What do you think the percent is?
Let us know in the chat. Give us your best guess. It's actually kind of a little bit higher than I would imagined.
So yeah,
It's actually a little bit higher. And we'll let them come up with their assertion for what that level is. But basically, it's been reported that since this heat wave hit Texas, the Bitcoin mining outfit Riot Platforms slashes production in the state, receiving the $31 million in energy credits for the power it would have otherwise consumed. It's noted the platform cut its energy demand by 95% to redirect crucial resources to local electricity providers and just mined.
so I feel
just
like
300
Jordan,
Bitcoin.
Carter, and Fade and TradFi just looked it up, but they are correct.
They are correct. 3%.
3%. So you're going to pay these miners 3 times the amount to stop mining Bitcoin because they use 3% of the network, which makes me wonder, and this is not something we can answer right now, but the people in charge of eCourt, are they involved with any other mining companies or anything else? But it doesn't make sense to me why you would spend triple the amount to stop something that's only 3%.
Yeah.
Versus I'd be interested, say everybody shuts off their AC. Or everybody using their AC, does that use more than 3% of the network? That's not an answer I know right off the top of the head, but it feels a little weird.
Yeah. Well, and apparently this is from Jason Less, the CEO of Riot. The company's curtailment of operations meaningfully contributed to reducing the overall power demand on the system. But think about that. They only used 3% to begin with. August was a landmark month for Riot in showcasing the benefits of unique power strategy. These effects of credit significantly lower Riot's cost to mine Bitcoin and are a key element in making Riot one of the lowest cost producers. So they're lowering their overall cost for mining Bitcoin by getting these government payouts every time their basic energy system falters. Very interesting stuff to think about.
Yeah. And it's like, how much would it cost to, like, again, if them paying off 3% of the overload gets them good, if we will, why would $21 million worth of infrastructure upgrades not be better than that? And again, I don't work in this industry. I don't know what any of that costs, but it makes me start asking a lot of questions.
And another thing you think about is they curtailed demand. They cut its energy demand by 95%. Only operating at 5%, mining just 333 Bitcoin. That in and of itself, they were only able to mine this much.
At 5%?
Yeah, like they cut their energy demand by 95%.
And still made 333.
And still made 333 Bitcoin. So like they still made $9 million from how this is written.
Okay, I was doing that math wrong. That's really weird now.
That's really weird math. There's something interesting going on. And now you think about it, the result is you have Bitcoin miners forced to shut down during climate emergency. And that talking point is able to be spread amongst a bunch of retail people while the price is down, while there's no real positive attention on the crypto markets. It's all just drama. And are we dead yet? But you know, while that's going on, now mainstream media has the talking point that, oh my God, they had to stop mining Bitcoin to save the energy grid, right? Like it was already at risk. There's an inherent risk built to the background because they were mining that dirty Bitcoin. Think about that stuff going on there for the talking points and the overall narratives that are being developed as we're in the bear market. Kind of seems like maybe they'll keep people less interested so that I get to buy low and make life-changing gains, right? So that's kind of the interesting kind of reading between the lines that we're doing on this subject matter. In general, I think that the connection to Bitcoin and Bitcoin mining and the energy system is going to be more intertwined as the years go on. It's just going to take time for Exxon and Shell to outwardly admit, yes, we are intertwined with Bitcoin mining and it's here to stay, right? It's going to take time. And you have to be patient for the real good truths to come out. That's what I always say. So this broke out of Arkham. We're talking about it a little bit on the morning show. Arkham has identified Grayscale's Bitcoin Trust holdings on chain. Kind of an interesting platform. Arkham is indeed. If you click into the link, you'll see it takes you to this, which is the Grayscale overall Bitcoin account, and you can visualize everything by clicking this link. I didn't get signed in time to do so, but if you click this, it'll help you visualize the wallets, kind of where the transactions are moving to.
Grayscale is worth $21 billion.
It's a chunk of change, right? Chunk of change. But another interesting note that the Bitcoin holdings they have, which are over $16 billion, are spread across 1,750 different addresses, each holding no more than 1,000 Bitcoin apiece. So very, very diversified wallets that Grayscale has all their Bitcoin in. DZ was kind of highlighting a very relevant point. That's a lot of seed phrases that they're keeping track of in the background, but apparently they're diversified just in case he's probably playing it a little bit safe. And that's a good little just side note for us. I know we're mid-level or potentially some viewers are even high-level crypto holders. Having it spread out in different locations is useful. If you do experience things like Celsius, going under, then you don't have absolute full-on exposure to that particular thing. And then leaving your coins with another custody, a third-party custody, never makes me feel great to do so in the beginning. So I wouldn't recommend. Yes, diversify is important. But Arkham Intelligence, pretty cool little website you can check out. But they also, be wary because there was reports that some of the signups or something like that, like the email addresses for sign up to people, were reportedly leaked. We got to see if there's more information on that. But, it's an interesting platform. I'm paying attention to them to see what it ends up being, because tracking crypto and having that accessibility to transparency in a user-friendly format, I think is going to be a really powerful thing to have. As if we expect cryptocurrency to continue to develop, it's got to become more and more user-friendly for people to get a good visualization on how the market works. So I see value in it from there. And we also have this from Ripple's Chris Larson, criticizing U.S. crypto policy, saying San Francisco lost its status as the blockchain capital, among other things. I will say that for San Francisco. Larson is highly critical of the United States' approach to crypto and blockchain regulations and expressed disappointment that Biden administration policies have pushed the crypto industry offshore. According to Larson, this has resulted in cities like London, Singapore, and Dubai becoming the new global capitals for blockchain at the expense of San Francisco and the U.S. at large. Larson has lamented that San Francisco was once the blockchain capital of the world and has since lost that title. That is very painful to see as we see the technological arms race heating up. We got to get these guys to get their heads out of the rear. And also, if you want our regulation and our lawmakers here in the U.S. to stand up for our rights in crypto, smash the like. Share this far and wide. Let them see. You know what I mean? Let's get this thing to 420 by the end of its showing tomorrow. Let's get that done. Larson has had strong words for Gary Gensler as well. As we know, head of the SEC accused Gensler of preferring a lack of regulatory clarity so that he could make up the rules as he goes along through bullying, which is basically exactly what we've seen from them. Larson stressed the importance of having a clear, well-defined rule set in place that protect consumers while fostering innovation, contrasted the U.S. lack of clear guidelines with places like London, Dubai, etc., where they have clear rules and things are beginning to be built out in those locations more so than the U.S., which is not what me personally here in the United States I want. I want us to lean into a new technological renaissance. I want us to build out our own infrastructure, stop relying on China to make all of our little Walmart plastic goods, and just kind of recapture that American spirit of manufacturing and ingenuity. I know it's still there. It's buried within people. You just have to keep digging, keep clawing at them to get it out of them. still there, the will to fight and to be knowledgeable. So don't give up on them yet, but we do see some problems in regular stock market. I did a brief covering on Liberty Safes yesterday, which is probably going to have its next Bud Light moment. But Disney, Pfizer, Dollar General, Dollar Tree, Hershey with its chocolate falling, Illumia, Kellogg's, Next Extra, Income, Paramount, all these mainstay kind of Wall Street stocks have hit 52-week lows at the same point, and this was yesterday. So it is looking like Wall Street wants to stop bleeding at a point. We're going to see if they are able to do so. But then you have things like this. 20% of Apple net income comes from China, and the government of China has banned officials from using iPhones. Roughly over 400 million in the workforce, excluding migrants. 50% of the workforce in China works in the public sector. So this is just highlighting that quite a few people in China use iPhones that can't anymore. And we did see Apple fell by like 3.5% in just one day yesterday. So it's retracing a little bit. DZ asked my opinion on why we see this happening. Could be potentially that Apple is trying to behave better for the American government, knowing that the American government is probably going to be at hard-sided contention with China over Taiwan over the next few years, which is my opinion. It's not going away. It's just a slow-moving conversation that we're a little bit ahead of. So yeah, and then also just on the macro side, Germany had July factory orders plunge by 11%. Factory orders, meaning manufacturing production orders to be fulfilled. This is the biggest monthly drop since flu season of April 2020. Interesting to see how Germany is going to fare during the whole conflict. I know there's a lot of things pulling and pushing their market right now, and I don't see it getting any better. So these are all just macro indicators that quantitative easing might be a necessity in the near future for EU, for the US, for China as a whole to turn back on, and then risk assets actually absolutely explode in those environments. So I know we've seen a very hawkish and kind of scary Federal Reserve coming out, higher for longer conversation. A lot of fear that we're going to return to 18% interest rates for homes.
I think we will.
You think I don't see. We have so much more debt than in the 1970s.
I mean, it depends. So looking at that chart that we looked at a while ago, if you look at interest rate cycles being 40 years,
I remember that chart. Yeah.
Granted, we have different inflection points on events. So if you go World War II to the 1980s, so 40 years, towards the end of that, you do have Nixon taking us off the gold standard. But basically, interest rates would have peaked in 1980 and theoretically would have hit their bottom in 2020. So that would have been the next 40-year mark. So right now, we might be at the lower side of everything. So, look, it's my biggest fanboy, Vegan JP.
JP,
yeah.
JPP.
It's like
potential, but there is so much more debt and so much more on the line that are basically at risk of going insolvent if they do continue to rise to those same levels that they had in the 70s and 80s.
Well, the other question I have is, I brought this up a few weeks ago, and I don't feel like we've talked about it more. And by we, I mean just like the royal we, is Charles Schwab potentially being the next SVB.
Yes, I did bring that up. I did bring that up. Absolutely. Absolutely.
It's relevant when we're talking about everything.
They're right under SVB.
Wait.
And they are Silicon Valley Bank.
Well, you know Charles Schwab Bank?
Well, I'm reading The Fourth Industrial Revolution by him right now. I just wanted, can you elaborate, explain that to somebody that, what does that mean?
That they might go insolvent.
Klaus Schwab.
If you notice that they're
Charles Schwab.
Yeah, Charles. That they're not. Basically, that's why a lot of mortgage rates are going away. They're getting rid of a lot of people in general. And then the other weird thing to look at connected with that, with the housing market itself, is a lot of people claim that the reason 2008 happened was because of subprime mortgages. But if you look at the percentage of subprime mortgages that existed back then versus the amount that weren't, things aren't that different. So 2008 wasn't truly caused by subprime mortgages. It was just almost like an excuse.
Yeah.
I'm going to go on a weird tangent here. It's almost like people being like, oh, yeah, fluoride's fine. It's like, well, no. Fluoride ended up in the water because it's a byproduct of making aluminium, and they didn't want to pay to dispose of it, so they just convinced you it was good. So same thing in 2008. There was so much crony capitalism going on that they were like, oh, oops, it was subprime mortgages. We're not going to do those anymore, so we're good. And everyone assumed that the problem had been absolved. It hasn't. So between that potentially being a new thing, a giant bank like Charles Schwab potentially going insolvent, who's buying all these bonds? Like, where's all of this going? So a lot of this narrative is going to get very interesting very quickly. I don't know where it's going at all. Like,
Absolutely.
It's kind of scary. That's actually terrifying, to be honest.
You know, and it can be. I just feel like the solution to this is just more money printing. I mean, it's either that or let it collapse. And I really don't imagine that a collapse is a preferred path. You know what I mean? Like, I think that keeping civil rest is going to be, I mean, oh God, but then you see about the media and how they are stirring each side up for this coming election, and that, you know, that hope that reasonable people are somewhere to be found in mainstream media seems to be farther and farther away from the truth. I'm trying to find the graph that, I mean, it listed SVB it owed 140% of what it was taking in, right? So it had a 40% deficit on what it owed compared to how much it was making. Charles Schwab is at 130% right now.
What?
So like they are at just in general, a 30% deficit to what they owe on what they're making.
I didn't know it was that bad.
It's bad right now. And we covered this, I think it was Wednesday last week. I mean, because obviously all the stuff going on, everyone is, you know, busy, you know, quarreling over that drama. But while that's all happening, the literal entire banking industry is at risk of going insolvent. It's sitting right now, you know, in general, the liquidity that banks at large have to use is at $2.2 trillion. But $1.8 trillion of that has already been called for in unrealized losses in the securities sector and in real estate.
Jesus.
And it's all being caused by those interest rates being hiked at the rate that they have been. That's what macroeconomic people are not highlighting, is that the velocity of these interest rates are faster than they've ever been, and the results of them are going to be more violent.
So do they have to Panny 2.0?
They have to.
Like,
right?
it's
They have to do
weird.
something.
And DCA and Prey and a lot of other people are bringing up, I know nothing about this. Are we talking about Poland? They just dropped their fund rates by 0.75 overnight. Anybody know anything about that?
I need to look into that, but I'm not surprised by that, because the EU is in general going to have to pull their foot off the gas quickly. And I'm glad he's highlighting that. That macro stuff matters, man. A lot of people are like, oh, it's Poland's in the EU, it doesn't matter. Like, birds of a feather flock together, right? And so when we saw the U.S. raising its interest rates, we saw the EU trying to do the same and save face while the Nord Stream was cut off by potentially the U.S. And they got squeezed by the cost of natural gas. They got squeezed by just overall cost of living for their citizens. So you have these central bankers come out, act all hawkish, promising that they're going to make the money more valuable. And really all it causes is just higher unemployment, more pain for the people. And then they wait for you to be in so much pain that when they turn their money printers back on, you don't ask questions about, hey, you're printing away the value of my dollar. The same way that they printed 80% of currently circulating US dollars since 2020. 80%.
So insane.
80% of all dollars.
Like, we literally mock S coins for doing something like that.
Absolutely. And think about the context. If you think about it, like, that's what a corner dog does, right? Before its final moments, right? It's getting desperate. It's getting unreasonable in the movements that the central bank is doing to keep this fiat Ponzi going. And I mean, it's hard and it's painful.
Is that going to be our punk band, Fiat Ponzi?
Ooh,
Fiat Ponzi.
Might be good.
That's a good
On
name.
a side note, CE said, hey, AJ, which I don't know if you mean me. What did I say? The cocktail for ADHD and memory relief? It's probably talking about DL-phenylalanine as one that deals with PEA pathways. And then some people say doing that with something like magnesium supplement as potentially, oh my God, what is the other one? 5-HTP.
Yeah.
But primarily the DL-phenylalanine.
I like how you segue into important stuff. Now he's talking about sharpening your mind, right? And we're absorbing a lot of pretty macro information.
It's almost like I think Sen Diesel talked way earlier about one of the supplements they were taking was NAD.
Mm-hmm.
You don't take NAD.
Yeah.
Like it's literally going to get acid catalyzed in your stomach. You
Yeah.
take something
You were
like
talking about that
NMN
today too, yeah.
or NR.
I'm on the.
You never want to give your body the end product because it's never going to do anything.
I've been liking
with
the
it.
Genius Consciousness brand, the Lion's Mane mix. I like the Lion's
They're
Mane.
good. I pulled away from them personally because I was taking an NMN supplement from them, and then after I guess it was the end of last year when they tried to make NMN illegal in the U.S.
Yeah.
They removed it from their main product, and then I continued buying it on subscription for another 5 months until I looked at the label and then just realized it hadn't been in there. And they said nothing about it. So honestly, I'm not a fan of that company. I think that was super scummy to remove the main ingredient on something I was paying $140 a month for. And
That's a little sus.
They just took it out.
You need to send me a link to the one you like. I have stocked up on NMN.
I think we're getting it from the same place now.
I think so.
I'm pretty
Well, mine comes in a big bag. It's like a.
It's just the question is NMN versus NR. One of them's nucleotide riboside. I'm sorry, mononucleotide riboside choline, and then there's I think it's the NR, and then the other one's the beta. But there's debates whether one of them can cross the blood-brain barrier or not, and I believe Dr. Sinclair did everything with NR. So there's still debates back and forth on throughout certain metabolic pathways, like which one truly gets you the maximum efficiency of making NAD.
Yeah.
So
I always like talking to you about. I between your advice and my wife's advice, I feel like I've got a pretty good compass. I feel a lot more energy when I'm on the Lion's Mane and the magnesium.
Both those are going to be fantastic.
It helps a lot when I'm because every day, our job. I come in, I absorb news basically 24/7. I look at counterpoints. It's our job, my job particularly, to research not only a main narrative but also the counterpoints to that narrative. Because I think that's
also
important.
Vegan JP says just eat whole foods and plants and you'll be good. There's validity to that, but there are natural biorhythms that happen. So as you age, your body is going to go through what are known as epigenetic changes. So your body's going to make budget cuts, and it's literally going to shut off certain productions. So you start producing less glutathione. You start producing less NAD. And by both those processes, you're going to start stacking up what are known as senescent cells. So cells that need to be cleaned out, that just stick around. You're going to make less ATP. So that's not a thing that you can eat away, for example. So you need to actually supplement with these to be able to do what's going into basically reversal of aging. Your body is only going to repair DNA ever so much because of, again, natural processes where the body will make cuts. So it's almost like you're tricking your body into going into a reversal of aging. Now, whether or not this stuff works is still very early on. There were some really good studies, like I said, with the Glynac that I thought was pretty cool. However, they were taking 13.6 grams a day.
That's quite a bit.
Which is relevant.
That's quite a bit.
That's a shit ton. So if you're dropping down to, I've seen some other studies that are around 1,600 milligrams a day. So 800 and 800 of NAC and of glycinate. So it's worth looking into, but where we're going into this like transhumanistic era, whether it is with biotech and like proteomics and actual like gene control with like CRISPR genome editing and all of that stuff, is how much can we fool the body into certain things with nutritional supplements? Because again, why, like what I said a little while ago, I don't like necessarily taking end products because your body doesn't know why they're there. So if you're giving them macronutrients that your body's not necessarily expecting, you're getting the building blocks to build what you need.
Yeah.
So again, if you take an ADHD medicine, your body doesn't know why you're taking it, versus if you look at an amino acid like DL-phenylalanine, you're like, oh, wait, the reason why I'm like this is I'm not getting the building blocks to making PEA, so that all these other neurological pathways are getting screwed over, but now I have that building block again, so I can go back to that point. Magnesium's another one of them. So a lot of these things...
Magnesium had a measurable effect on me. Like
about 90% of people are magnesium deficient, and then you have to find which versions that you want.
Yeah.
Some people claim transdermals are some of the best ways to do it.
Sushi.
Sushi.
I can't do sushi.
What? I love sushi,
do
but
sushi.
magnesium's big in that.
Is it not?
I don't know that, but like some of them. I mean, you've got magnesium glycinate, citrate, taurate. Like there's a bunch of different forms, and I'm trying to remember the cheap one that most people take. That just literally you're making expensive pee.
You know,
Sorry,
you're going to
derailed
have to
there.
drop the link for the NMN link of where you get it in the Discord, because I'm kind of curious actually too.
Yeah,
I got
and
a
I would love to
revolving
actually
order
test
for
it
Genius Consciousness
to
but-
see if it's real.
Yeah,
But like the only way I would know, like I would love if Chemistry Bro was here, because I feel like you would have to do I was going to say NMR for it. So it's nuclear magnetic resonance. So basically it takes whatever compound you do, it gives you a graph, and then where you have the frequency lines will essentially be like, okay, this is a double bond, this is an alcohol group, this is a carboxyl group, and then you're able to actually figure out what the molecule is, because there's debates that the supplement industry, there's nothing in there.
Ugh,
So you
placebos.
really have to look at all this.
It's true. It's true. That's why, you got to do your own research. We got to think for ourselves. And that's kind of the point of this channel, this whole network, is to bring the information to you, get you to think.
And I'm still learning this stuff. I'm not smart.
Yeah.
I'm still learning
It
a
should
lot
be
of
a
this.
constant process. Learning is never done. You should never be satisfied. I know everything.
Now, here's a weird thing. So Sin Diesel says transdermal magnesium tends to be better. And I do agree with that. Do you think that's why they don't want us walking in the grass?
No.
I mean, that's probably a stretch, but maybe it's not.
Oh my
Maybe
God.
it's not.
Well, we're going to go get ATB set up, get it all going. Thank you very much for joining us. We had Hannah, the long lost prince over there on the buttons. You know what I mean? Hiding off. Mr. Morell, I see you going through coins. What are you going to be? What are you watching? What are you going to get?
Working on.
Oh, you're getting them all on there. Okay. Just you're putting all your faves
Designing.
on there. Okay. A little chaotic of a shot, but whatever. BJ, always fantastic. You always get me thinking about how to better myself.
Oh, I just made all that up.
Well, I'm gonna cross check you with my boss tonight. So
No, I'm excited for the bull run because I want to go back to school.
yeah,
Yeah,
There
that's
it
what I'm
is.
most
What?
excited about.
The medical school.
To finish biochemistry.
yeah.
Yeah, I was a pre-med
Hell
biochemist until
See?
I had to drop out and take care of my parents and raise my brother. But
See,
it is what it is.
Using it to improve your life. That's what it's all about. But thank you for joining us, everyone. Stroked RB 100 billion HP Club, Catching Wells, Vegan JP, BG,
DC's
Rooster-
hairline holding 4 chain link and a Chrysler 300.
Oh, he's
God,
at
the
bottom.
evolution is phenomenal.
Literally,
It's
this guy's lore
Don't
is
you go changing,
awesome.
man. Until next time, we'll join you tomorrow. Hopefully something big happens in the markets we could talk about, up or down. The action is where it's all about. And until next time, we bid you adieu.
Deuces.